to TradeTheNBI.com. This is John. This report is for the 13th. And look, we're right in the exact same range that we've had marked for, well, geez, a couple weeks now. I mean, it's just the same thing, not too different than we expected. We still had a bias to the upside from it. Anything above that 2046 was it. Around that 2070, and wanted to be cautious to prepare to take some gains in case we didn't get the follow through. Now, we did get red higher. Yes, check. All right, we've got the green, minus 652, cyan 645, right at the meeting point. This should give us our breakthrough moment. We were having rise and shakeouts from that standpoint, still long, as well as nice readings from the extreme histogram. All right, so that's good from the daily standpoint. Intraday, we can see 50K chart, long short algorithm moving, but the key here was the pivot of the red right there, the green cyan buy on that long bar that came up above the long algo from this previous one after the oversold. That's why we love number ones, and I usually take gains on short moves after the number ones for that very reason. And then sure enough, we continue and progress right along. But we can see that right midway up there, we had a little bit of a short signal, but we've reset with the steal in that. So from those standpoints, not horrible. But let's look at the intraday 5K. So we started off the morning with the dip below the 7.5, which produced a nice little buy signal even after the number 2. So if you missed the number 2 originally, you still had the secondary plays that came along there. That was good. Well, even if you follow what I had marked there, which was 57 and a quarter, ended up with our sell signal around 68. We had the DOC spread that comes through there, and then boom, the next bar over here, we finally get a lower of the red, which is why it's just after where the actual DOC crossed the green, which you could take that point. But oftentimes when that red is still rising or flat, you got to give it another one, and you can see here we ended up with a lower shakeout, and that was a nice decay from that level. 68 went all the way down to the 64 range here. That buy comes in off the oversold at that particular point, and then even from the buy at that 68, which we were marking, let me get my info window back up here, 64 and 3/4, and depending on where you liked it, that's the clean one on the cyan 69, so another decent one, and then the 69 short brought you to the turnaround play right there. At 68. Now, it's interesting because you ended up with your buy signal there, and then immediately you pivoted up, but though the steel stayed above the cyan turn on that one at that particular point, and then it got oversold, and you got the long algo above the short. So it's one of those where if you did have a stop going just below there, you were fine to hold that one and then move it as soon as you got back above the short algo, and that would have been my stop from then on. And in this particular case, that took you all the way up to the 73 and a quarter, which was a short from that point. And then, like I said, I like to cover some of the number one, which took you down to 68 and 3/4, which I imagine most people didn't expect to, capture a quick little 5-point move on the end of that one. It was pretty easy when we talked about that on the Skype chat. So not bad. I don't really have any objections. I know there's all this with the grease and blah, 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 blah. That's all it is a bunch of noise. It's the algorithms taking advantage of this increased fear and utilizing that volatility with a little bit lower volumes. They can go ahead and move things around. It would be an interesting test to start the week, though. I think that with the potential moving back up to the plus side, we don't know about what's going to take place with the Greek deal or that, but really the China issue and longer-term growth prospects are a bigger concern at this particular point. Puts us nowhere with the Dow for the year, not a surprise, and the euro free to roam at this particular point with oil prices so far below our range. They don't really care now, at least temporarily for the Fed. They would prefer something, like I say, above that 111 to 116 range, which is what we've been talking about for how long now, and it seems to work out beautifully. Be interesting because we got this read right here. We could end up seeing a little bit of a fade back into that if you look at the intraday readings, a little bit softer. And again, there you go, the range that we had up there. It's actually about time to lower that and give it a little bit more broader view as we come back to the cap there. So I'll be beginning to look for that one because this is a significant enough spread here, and we're staying far apart from it that we're going to develop a whole new range setup. And gold. Potential for gold to move a little bit more. So like it right around that 111 range. TLT put in that magenta dot sell signal right there on the DSC spread, and then it confirmed it as it continued to go. So I would look for a turnaround. Potentially, if things stabilize a little bit, everyone will jump back into the market a little bit more. Apple coming off that huge depressed move, and that's why we were lowering on that setup, especially after the number one. We wanted to be right around that range, so not bad from that standpoint. You expect that oversold. People see it as an opportunity to buy a good company. Amazon doing perfect, right in with our expectations. We had the 430 range pivot point, right back up at its highs. Baidu, you're not expecting a whole lot from any of the China issues at this particular point. When we will be watching those FAS, got to see some activity there, and it's putting itself right back into play. In fact, we've got move below the 7.5 range here, as well as the green now crossing above. We need to see the red get a little more active, but everything from that shakeout initial move here the other day started all of it, so pleased with that one. Facebook, it held up well within all of that, and it was in good shape here with the cyan below, red, white the whole time, all the way even when it reached these ABM supports. So not a problem. Again, we had our situation where we wanted to be out up at the yellow ABM, and then as soon as you dip down into these levels, then you can just start to attack it, particularly when it dropped right below there, and you had an opportunity to jump in even there the next day, where you can see that green clearly had the lead over it. Just building their position is what they do. Makes it nice and easy. And Google, likewise, we got marked well. Best chart in the world, Netflix, doing more of what we expect from it. In fact, now it's time to move all the way up to the ABM yellow at this particular point here. And clear safety range, this should be expected to move higher, and so nothing wrong with going to that more aggressive stop out point. And PCLN, just a slight recovery given where it was. Again, right off that number one oversold, you see oftentimes we get that little bit of a bounce. And there's the SPY, was showing a little bit of trailing to what we were seeing from futures, but right in line with it. Still, from an indicator standpoint, still trailing it just a little bit. We need to see the steel would be nice to get above 13.5. Would give you the impression that you're coming from underneath. That could give you a little bit more carry through. Fine. Shakeout, extremes, all those are in good shape. And Tesla, coming off a little bit of the weakness on the oversold. We liked anything on the flip around the 260, but certainly anything with those ABMs was attractive. This is a little bit more of a breakdown. Short-term buyers have held it up. You can see shorts activated back in there, so that becomes your short cover stop, and stay with it at this particular point. You're going to reset in the shakeout too, all the way back to zero. And the chart that keeps doing nothing and does it beautifully, Twitter. Continue to let that baby do absolutely nothing, and everybody is on the same page with it. So, you know what, I had my other MBI Opus stuff, we would show that one. This is the other version that would trade just slight variation to the original one, where it had the fall Predator Hawk, took that one, but then added after the close for the Predator Hawk, which then added the second Predator Hawk over there, and it took the combined move off of that oversold. Where is this one at? Let's look at the performance report. Well, for the year, 65,000, 4% gain on the year, 1.72 profit factor. Not too bad. Graph-wise, all-time equity highs. Every time you get one of those little green dots, that means you've reached new range. So not bad. This going all the way back to, again, the 2003 range. That's what the overall numbers look for. The other one had a little bit better profit factor. And we were talking about these because of the combinations. And again, I treat each one as an individual trade. So when the Foul Hawk comes in, it has its set target along with its set stop at the ATR. And that's all in the preset numbers if you look at the inputs section and go through it. And likewise for the Predator Hawk, the stop was down here, so it wasn't even involved in that one. And then when the second issue came in, it was even lower. So all good. As always, though, continue to look for me on the Skype chat. I know a lot of people are traveling, vacation stuff and that, but doesn't hurt to just check in periodically and make sure you're on tap with where the direction of things is headed. As always, though, trade well.